CPI just came out, and it came in line with expectations of 2.6%. Guys, you got to remember, we're coming off CPI 2 or 3 years ago being 10%. And that's why the jack rates up so high to bring the pricing levels down. That is why rates go up. Now, recently, they've dropped rates twice, 0.5% once, 0.25% for a total of 0.75%. Of course, this feels like an inflationary move, but who knows why they did it? Maybe they see weakening in the economy. I have no idea. Mo, what are you seeing on the CPI breakdown that might have been the most surprising? And by the way, what was core CPI too? Because core, remember guys, excludes food and energy, the very volatile parts of the CPI. Core CPI, as you remember, is what the Fed is really focused on getting at 2%.
Mm-hmm. So it climbed 0.3% month over month, matching September, and 3.3% over the last year.
That's a big number still.
For the third consecutive month.
So what dragged down overall CPI if core, it must have been food and energy then was down?
Yeah. So when you look at this breakdown here, you can see that fuel oil down 4.6%.
Oh, wow.
All energy energy was actually flat for the month. It's down 4.9% as a whole over the last 12 months. But fuel was the real thing that came down. Gas only came down 0.9%. Energy commodities down 1%. What else was big here? Apparel down 1.5%. That was really it. Everything else is almost flat. What gained? Electricity gained.
So it's interesting to me, Mo, because I still hear people worrying about prices. And I think part of the reason is incomes have not gone up along with those prices quite yet.
Exactly.
There's going to be a lagging, especially, some companies, they do standard raises every year or something like that. So it takes a little bit of time for those raises to come in. So people are probably still feeling the pinch on the high prices that came in over the last year and a half.
Yeah. So if you go to the Fed Watch tool, you were just talking about where interest rates are going to go. 82.5% think that we're going to get another quarter point cut at the December meeting.
Wow. And that's much higher than it was last week when we looked at it. I think it was like 60-some%. What was it, Mo? I think you can pull that up.
Yeah, last week was 58.7%. Oh, I'm sorry, 69.9%.
Okay.
Just one day ago, however, 58.7%.
So it's gone up because of CPI.
Yes.
So when CPI comes in lower, people are like, yep, it's more likely we have a cut because everything's coming along the way. But you got to remember, core CPI is still well above their goal of 2%.
Now, this is funny. 1 month ago, if you look at that same number, another quarter point cut, 84.4%. We're kind of right back to there. But you can see how it went all the way down to 69, all the way down to 58, came right back up to where it was a month ago.
Now, guys, on this channel, our goal is to talk about what happens in the markets. Remember, over a long period of time, this is all noise. Yep. This is not going to make any effect on investing over a long period of time. What matters fundamentally is what valuations you pay relative to price, and then what's the U.S. economy the company's going to do. And over time, I'm very confident that the U.S. economy will be a lot bigger 5, 10, 15, 20 years down the road. But we still have these valuations that are high. I saw somebody on Twitter recently said, Paul, would you stop with the whole valuations are high? No, I won't. And here's why. Because when valuations are low, I'm going to repeat that till I'm blue in the face. The key to remember is that over short periods of time, we have no idea where stocks are going. But we're at valuations over 100% overvalued from history. It could end up being okay, but what has to happen for that to be okay? My point, what I'm trying to make to people is, since the COVID crash, the stock market has gone up 3x in a matter of not even 5 years, 4.5 years. That's probably not going to happen again for the next 5 years. Could it? Sure. But we're coming off of very, very high valuations. But you look at Japan. Japan hit 40,000 on the Nikkei in December of 1989, and they just hit it for the first time since then, this past few months or the past year.
Wow.
That's 35 years.
That's crazy.
My brother was born in June of 89. In December of 89 was the all-time high. And in his lifetime, he had a wife. He went to college, law school, became a lawyer, got married, had 3 kids, all in that time until the Nikkei finally hit its high again. That's the thing. But back then, the Nikkei was selling for 70 times earnings, and Japan also went through a really, really bad slump economically. Mm-hmm. I don't think that same thing's going to happen to us for the next 30 years. We're probably going to be fine because people still want to live here. We're still having kids, and people are still coming to this country depending on what people in power decide to do. So I still look at core CPI. I still look at the Fed, and I look at them saying, I think they handled inflation very well a few years ago. The question is, are they going to keep bumping up these dropping interest rates, at some point, I asked the question of why drop interest
I
rates?
feel like it's not a good decision. That's my initial gut reaction.
My bias is it's not a good decision.
Yeah.
I want higher rates. I personally believe that great investors do better when things are harder.
I also think history says this is probably not a good decision.
How so?
Well, think about going back to the 70s and 80s when we had that was the last time we had rampant inflation, right?
Yeah, but it was pretty bad back then.
It was bad.
Worse than now.
Now they raised interest rates, cut interest rates, and they had to raise them again.
Yeah.
Are you worried about that at all?
You mean in the 70s? Mm-hmm. Yeah, but then they got really aggressive with raising rates.
Aggressive.
I don't worry, guys. You might sit there and go, "Well, Paul, I don't worry about these things." I just look at it and say, if you have a job and you live within your means and you save money, you're probably going to do well. So, in fact, you should want these bad times to occur. 1982, we had the lowest valuations of history. Our stock market GDP ratio right now is like 200%. Mm-hmm. Whatever it is, right? 190%. Back then it was 32%.
Yeah.
We were at 1/6. It would be like the stock market today selling for 1,000. The S&P is selling at 1,000. It's selling at 6,000 right now. That's the difference. Imagine buying the same companies today, the same profit, the same cash flow, the same balance sheets, but paying 1/6 the price. That was where valuations were in August of 1982. Mm-hmm. Could they end up raising rates again? Yeah, maybe. I do think hopefully that as time goes on, we're better at handling things because we used to have a lot more and deeper recessions back 100, 150 years ago. Now it's a lot better. So I'm looking at these things thinking, okay, just don't get yourself all worried about the short run. If you worry about the short run, plan for the long run. Say, work backwards, right? Sit there and say, if I wake up 10 years from now and the economy isn't better, if the stock market isn't better, what made my life worse? And it probably is a combination of spending too much and not advancing your education and knowledge to get more money in your career. So go do those things. Save more and get yourself better trained to find better paying jobs. I think that's the way in which you can sit there and protect yourself as a member of society and as an investor. And guys, Bitcoin, have you seen Bitcoin?
Like
92,500 as we speak.
Dang.
Yeah, I don't know what to say. You guys know how I feel about Bitcoin. I think crypto and Bitcoin in its current state is not a long-term asset. It's a very speculative asset. I think this will end up being the poster child of this bubble in terms of a purely speculative tool. For those of you who think, basically, if you're betting on Bitcoin, you're betting on the NASDAQ. And the difference is the NASDAQ has cash flowing businesses that have substance. Bitcoin and crypto do not. They do not. And isn't it funny how Trump just created the Department of Governmental Efficiency called Doge? Yep. That's just funny.
Run by Elon and Vivek.
Yeah. And they're going to sit there. The question is, are they actually going to become, it's ironic, they created another government entity in order to hold people accountable for government efficiency. Isn't that interesting?
Well, they're going to get rid of a lot of pieces of the government.
You think they're going to do that?
Yep, sure do.
You do?
Yes. Yes, I do.
You think they're going to get rid of government?
They're going to do a lot of deregulation, and I think they're going to get rid of some departments in the government.
Wow.
I do believe that.
I just think it's going to get stopped.
By who?
I know they control the House and Senate, but it's going to take some time. I don't know. Listen, I truly believe that a lot of these government matters should be state regulated. So Department of Education should become a state and local issue. Doing that. That's what they say they do. Yeah, I also said he wasn't going to build a wall.
He built the wall.
And he got a lot of wall built, which is kind of impressive.
Build that wall.
Maybe it'll happen. And guys, for those of you who worry about things like that, remember, a more efficient government means less taxes. Less taxes means more growth from spending. If you have more disposable income, what are you going to do? You're going to go spend more money. If I have more disposable income, if somebody tell me tomorrow, Paul, your taxes went to zero, I'm going to spend more money.
100%.
And I'm going to try to grow my businesses. Because I'm going to sit there and say, great, the more I grow my businesses, the more money I'm going to make tax-free.
One thing that drives me nuts is when people say, all these billionaires getting tax cuts. What do you think they're doing? They're not going and buying more planes and boats. Yes, they will, but that's also helping the economy. But they're also going to create jobs.
And they're also going to donate more.
They're going to innovate. They're going to donate. They're going to do everything. They don't just take
do believe in the trickle-down economics of, 100%. People say, oh, that's a scam. It's not a scam. Show me somebody's incentives, I'll show you their behavior. Yeah. We can all agree with that. And by the way, guys, if the government takes away social programs that you think are important, go write a check and go support those social programs. And if you don't do that, I'd sit there and say, well, then Are you really being true to yourself and what you believe? Like, put your money where your mouth is. But guys, we're going to have a bigger economy over the next 5, 10, 15, 20, 25 years. We're absolutely going to have a bigger economy. And for that reason, we will have a bigger stock market as long as you pay a reasonable price. But even if you start investing or you dollar cost averaging today, we've proven time and time again that if you invest at peaks of market, but dollar cost, you can outperform the market. How? By putting more money in as values are lower. This is a very, look at I talk about the NASDAQ till I'm blue in the face. It fell 83% from peak to bottom in 2000. But if you dollar cost average starting back then, you got a 13.5% return on your money up until today.
Crazy.
That's crazy. That's after swallowing an 83% drop. And by the way, it also took 15 years to get back to even.
Crazy.
But that's the beauty of compounding with dollar cost averaging. That's what's wonderful. And we're here for the channel for it to make everything feel better when things feel the worst outside. Remember, media makes more money when they put out negative news. We put out negative news, but we put our positive solution to that in our videos. That's a very, very important thing for me because I don't want to be this guy out there who says, everything's awful. Do I think there are concerns long-term? Absolutely. But I offer solutions for those issues. So guys, if you like this, do me a favor, subscribe to the channel. I appreciate your time.